Well, we are thrilled to welcome our first guest to the Crisis webinar. These guys are super smart and super great guys. We have become friends with Chris Martenson and Adam Taggart over the years. They've been big contributors to our Investors Summit at Sea every year. And what an amazing book they came out with, Prosper, which is about the 8 forms of capital and the 3 E's, which we'll touch on today. And really, the reason I wanted to start with Chris and Adam is their message for years has been preparing for whatever may come. Chris put together an amazing video series called The Crash Course, which isn't just about prepping in some strange hideaway in a bunker mentality. It's more about how to intelligently approach what may or may not happen in the future and be prepared for it. It's one of the books that I not only read and enjoyed, but took action on. And maybe the best thing I can say about it is, in the light of what's happened in the last few months, my wife says to me, well, I'm sure glad we read Prosper. So with that, let's say hello to Dr. Chris Martenson and Adam Taggart. Hey, guys.
Hey there. Great to be with you both.
Hi, Robert and Russ. Thanks so much for inviting us on.
Well, I know you guys are super busy these days, and part of that's because you're always super busy, but part of it's also because you were kind of some of the very first people to be sounding the alarm bell about coronavirus. You know, Russ refers to you as black swan watchers, like you're out there looking for what may be coming, and a black swan is something we're not necessarily looking for, but you kind of have been. And Chris, with your background as a scientist, your background in pathology, obviously this wasn't just, oh, there's news about some virus. You had a lot more understanding about it, and you were talking about it early. If you can, give us kind of the overview of how it got on your radar and then how you messaged that to your audience and to the world.
Yeah, thanks. You know, when I was training at Duke University and spent a lot of time taking all the courses with the medical students and really learning about how these things work, I had to take courses in virology and epidemiology, things like that. I mean, pathology is the study of all diseases, and guess what? Infectious diseases is a big part of that story. So yeah, we looked at smoking damage in lungs and things like that, but I had to learn about viruses, and I have to be honest, it had been a couple decades. You know, I had to really dust that stuff off. I'd heard about a little bit of a flu going on in China, and of course, since SARS, it's been something, you know, that's I keep a little bit of a scan for, because our larger model says that we're in this everything bubble. It's in search of a pin. Honestly, pandemic was number 5 on my concern list, but it was there as a thing that could be that black swan. So I was starting to note, and there was some signs coming out, but it didn't really catch my attention until I woke up on the morning of January 22nd, and Wuhan had been completely locked down. And I trust actions more than words. The Chinese would not lock down a city of 11 million people in the heart of their industrial land without it being a really serious deal. I didn't know how serious, but I knew that it was serious, that I had to put out an alert, which we did right away to our subscribers, to the world. We made that one free because, you know, trust me, when you see China do something like that, they are so protective of their economy. That's literally the last resort for them. So that's where it got started. And then just started tracking the data as best we could coming out of China, reading early preprint, you know, non-peer-reviewed science stuff, reading between the lines of press reports. And what really caught me was we had about 5 days where you would get all these horrifying images of hallways and hospitals filled with people. They didn't have enough rooms. We had early reports of mass deaths, and then nothing came out of China. And again, I trust actions more than words. And when China decided they were going to put a firewall for all of that sort of citizen reporting, and they wanted no more of that getting to the world, that's when my concern doubled on this story.
Well, and one of the great things about what you do, Chris, and Adam, at Peak Prosperity, you accumulate and assemble a lot of great information on a variety of things, but this very much became front and center pretty quickly. And in your podcast, you were talking about it, having guests talk about it, and the places that you go for information are perhaps not the places that the world goes. People who are watching this through the lens of the big network news, if you will, aren't catching all of the story. And so we started to see some things that you were noticing that other people weren't talking about. And then we have the side, and we have not made it a point on this webinar to take any side. We're kind of saying, what's your opinion and what's happened? And frankly, most of this series is going to be about the financial and economic side, but because you watched this on the health crisis side, with an eye, of course, for the economy and jobs and all of that. Take us through then kind of what happened, because there were people saying, oh, it's nothing. That wasn't you. You were saying, guys, this is serious.
Yeah, exactly. And I always said we had three things that we needed to balance if we were a healthy culture, right? One, absolutely, you got to get your hands around containing this virus. You don't want it spreading. You certainly don't want it spreading in your vulnerable populations, people who are elderly or people with comorbidities. That's what you would do if you cared about humans. And on the other side, you got to make sure your hospital system doesn't get overwhelmed. That was an early concern. Before we had any handle on treating this, we saw hospitals get overwhelmed in Italy, in China. And when that happened, people died for all sorts of reasons, including COVID, plus the heart attacks that didn't get treated, plus. It's a disaster. So you don't want your hospitals getting overwhelmed, but then there's that third piece. You can't crush your economy because more people might die from the economy getting shut down than from even the virus itself. So we've always been saying we got to balance all three. And so to the people who say either, oh no, this virus was nothing, or oh my gosh, we have to shut everything down, we're neither of those two camps. We think two things are true. It's a pretty serious disease. I don't want it. I got to be honest, even with the treatments we've got now. And you can't crush the economy at the same time. You've got to find a way to balance those two things, which requires clear, consistent communication, solid leadership. And in the United States, I got to be honest, it's been a mess, right? CDC said, don't wear masks. They're dangerous. Oh, wait, maybe you should. Maybe, I don't know. Like if we can't even get something as simple as wearing a mask right, the rest of this is going to elude us, I think. So we've been fairly critical, but in an honest way. We have data to back us up. We looked at countries that did it really well. There are countries that got through this without doing shutdowns of their economy. And to us, it's a mystery. Why wouldn't you model that? Instead of saying, how does the United States want to do it? Let's just ask South Korea, hey, how'd you do it? And they've got a whole plan for how they did it, and it makes a lot of sense. Or you could follow maybe Sweden if you wanted to. It's a slightly different model. Or you could follow Taiwan. They did a gold standard job. Japan. There's a lot of countries that did it well. And so what we've been really doing is surfacing the data because we wanted people to see that. And it's been amazing, Robert and Russ. Our tribe has grown because this is our tribe. Our tribe is made up of curious people who like their data that's not been politicized. And, I got a lot of flack from the left and the right because I don't do either. I do up down, right? Can you make a good, clear, cogent, rational, logical argument that will change when the data changes? Or are you going to stubbornly stick to your ideological guns, right? I don't do that. I'm up here, love the data. It's been a fascinating story to watch unfold. And one of the things it's done is it's kind of exposed national values across many nations. And I think that's where this is going to be I think the virus is fading right now. Pretty strong evidence of that. I think we've got a pretty good handle on how to treat it going forward. Let's hope it doesn't mutate or it doesn't have some secondary infections. We'll have to wait on that. But barring that, the question now is how are we going to move forward, and can we do that in a fair way or not? And if we get this wrong, I think it could be pretty dark for a lot of people economically, because again, this was a massive bubble we had. It was 10 years in the making. Coronavirus didn't do it, create the economic troubles. It just put a pin in something that was already looking for a pin.
Yeah, such a good point. And I think before we leave the healthcare side of it, and there's a ton more at peakprosperity.com, and we would encourage you to, if you're not already following Chris and Adam's work, to do that, because there is a depth of information there and kind of that evolution. I remember early on you were talking about the rate at which the percentage, of people that die from it, and you kept saying we just don't have enough of the denominator. We don't know how many people. And then, of course, the first cruise ship that came out where they tested 100% of people, and now those numbers shifted a lot. But rather than dwell on that part, I think before we leave the health part, it's kind of like the new normal. We don't know what that is going to look like. But as guys that have been championing getting prepared and getting into position, what are some things you think might make a ton of sense in terms of approaching a new normal?
Well, the most important thing is actually it's not very scientific. It's not really economic. It's actually more psychological, which is the most important thing is to get through the adjustment reaction. My view, might be wrong, but I'm not confused, is that we're not going back to how things were. That's not going to happen. That's yesterday. The question is, what's tomorrow look like? And guess what? Tomorrow's going to be great. There's going to be an economy. People are still going to need, good services and all kinds of things, but it's different because so much psychologically has now shifted in this landscape. And I think COVID has done some good things for us. For instance, it's made me more aware of viruses and how they spread. I mean, I always kind of knew it, but now seeing the data and understanding that, hey, we don't have to get the flu every year. Like, oh, what are you going to do, right? Get a flu shot and hope for the best. Now we understand that if people are out there dripping snot and coughing and sneezing, that's actually a hostile action, and they don't, I think it's going to be good that people understand basic hygiene better and how viruses spread, because now maybe we can spend less time getting sick in the future as a country. And we also understand it's not just about getting the flu shot. It's not the treatment you get. It's treating your own body with the immune boosting things, because everybody gets better from a virus. There's all these things we can do now, which are going to make us a healthier nation. And I'm all for that. So I think that's some of the good stuff that's come, but we're not going back to the world we had a while ago. And I think a lot of jobs just aren't going to come back because behaviors have changed now.
Well, I love the fact that you're recognizing and calling out that it is kind of that reaction, what you called in Prosper, emotional intelligence, right? Maybe you can speak to that, Adam, the emotional intelligence side of facing this reality, whatever the reality may be, and continuing that idea of, I want to be prepared for what may come.
Absolutely. So you mentioned the 8 forms of capital earlier in your introduction, Robert, and that's really sort of how we look at what comprises resilience, which really is the whole theme of the book Prosper, and goes to the heart of your comments there about being prepared for whatever might come. Right? We don't know exactly what tomorrow is going to bring. Stock market crash, pandemic, something good, something bad. Resilience gives you the ability to pivot, react, and adjust with the minimum amount of impact on your quality of life. One of those forms of capital is emotional capital, which is extremely important. And we just got a crash course in that with the pandemic here. If you are the type of person that sort of collapses under adversity, you did not fare very well. You're probably not having a very good time right now. The lockdown, big source of anxiety for you. Maybe you're worried about losing your job. Maybe you already have. You don't know what's going to come next. If all of that has caught you flat-footed and emotionally unready for it, you are not in a good place. Where those folks that were much more emotionally resilient have been able to either anticipate or roll with the punches a lot better and find either opportunity in the story or at least find another option set to be able to step into. So very, very critical. There's a term that Chris used, which I think is really important for folks to realize the value of on this theme of emotional resilience, which is the adjustment process. And that's really how quickly you can become aware of a new idea that changes the landscape and then begin to adjust your behavior to map to that new reality. And we found with the coronavirus, Chris mentioned we put the first alert out, I think on January 23rd. We went through the month of February really being viewed by the vast majority of people out there as alarmists and people who were taking this far too seriously. And it wasn't because they had data to come to that opinion. It's because they didn't want to have to change their belief system and their behavior. Wow. And I think the big learning coming out of that is eventually it was forced upon them. And it's a real tipping point situation, right? Where the masses, the public, and in particular our leaders, deny that this is a crisis. And then all of a sudden it is a crisis and everybody's scrambling in panic to try to react to it. And that's where, anybody who was sort of keeping their head in the sand or listening to the politicians who were in that denial phase, you had a real rude awakening there where, you had to eventually respond from a position of weakness in a panic where the rest of the world was scrambling around you. And of course, then we had shortages of everything and fistfights in food markets and, shortages of critical supplies like PPE and whatnot. For those who can adopt and work on having an early adjustment process where you can see, the initial data coming in that things might be changing and begin to ask yourself, okay, maybe still it's low probability, but if this does begin to become more true, what could I be doing today so that if indeed this becomes the dominant trend, I'm already positioned for that and I don't have to scramble and panic with the rest of the masses. That's a really critical learning to take from this.
Excellent. Hey, let's talk a little bit about kind of your framework of the three E's. So you guys focus on energy, on the economy, and on the environment. Start with energy because that's something that not a lot of folks really pay attention to. And here we've seen some interesting things happen, right? With the price of oil. You look at the maps and the charts. People during this time have traveled less, have consumed less energy. Chris, can you speak to the energy component and also if that's just a temporary thing, or if we see there's more long-term trends? You've talked about peak oil a lot. What do you see on the energy front in light of COVID?
It's a great question. You know, if you said, Chris, I want to track one thing about the economy so I can sort of get my hands around what is or is not happening, that would simply be oil consumption. It's the master resource. And so we've seen never before, unprecedented, historic, pick your superlative that you prefer, collapse in demand. And this has created all sorts of supply disruptions and price disruptions. It's absolutely crushed discovery. And so the prediction here is pretty easy. First, we have an extraordinary amount of economic wounding that has happened. And we track that in the 20 million barrels a day of oil that has not been consumed, which translates into, we don't know how much economic activity hasn't happened, but you're going to start to see it in supply chain shortfalls, mysterious disruptions in certain things. Oops, you know, your lumber yard doesn't have lumber anymore. Who knows, right? It's going to be very difficult to predict where and how these shortages are going to show up. But I can tell you that 20 million barrels a day out of 100, that's a 20% decline, tells me that world economic decline is in the ballpark of 20%. You know, you could do worse than sort of wave your hands at that. All right. Part two of the story, Robert's going to be pretty easy to predict as well, which is that the shale companies are just shutting down like crazy. We've never seen a collapse in rig count. Deep oil ocean drilling is completely stopped, on and on and on. Nobody's out there exploring for oil right now. No majors, no miners, no national companies. It's just stopped, right? And eventually we'll pick ourselves up and it'll take a while of, I think, a long U-shaped recovery, but eventually oil demand picks back up again. And then all of a sudden we discover, if that's in a year or 2 years from now, where we have to start drilling again, we're going to discover there's a big shortfall coming. And that's going to be, just as far as I'm concerned, and I'm sure your other guests will really pile in on this, but my view is a supply shortfall of oil and a wall of money printing by the Fed. Those two things combine into an explosion in what we would call inflation, as if it was this mysterious thing that happened, like a comet in the sky. But in fact, it's a very predictable thing that happens when you overprint money and you have too few things, in this case represented by oil, out in the system. So the destruction in the oil business is literally unprecedented. I'm still trying to get my arms around it. You talk with somebody like Art Berman, he's an expert. You talk with all the people who are in the business. Nobody's seen anything like this before. So anybody who says they know what's going to happen here doesn't know what they're talking about. And we sort of grope around to figure out what we think is going to happen. Pretty sure that this destruction in energy, first supply, demand, and then supply, I think is going to translate into a really difficult economic problem later on.
Yeah, and I think let's hold back the economy talk just a little, because that's where we'll spend the majority of the rest of our time on the webinar. We're looking at trying to flatten the economic curve, right? Like the same as flattening the health curve. But let's switch over to environment for a minute, because there's obviously an overlay there, right? We've seen less consumption of oil and gas, but therefore less pollutants and so forth. But I'm more interested in your take on, do we wake up and change our behavior in any way that could be positive for the environment?
Well, I certainly hope so. You know, we've seen some really amazing things happen as a consequence of COVID. Clear skies, people in Hong Kong seeing the stars for literally the first time in their lives, dolphins apparently returning to the canals of Venice, all sorts of things. And so I think that was at least a wake-up call to say, oh my gosh, it is possible for humans to lift their foot off of the neck of nature, as it were, a little bit, and see the benefits from that. I think a lot of people have woke up to that idea, and I'm really hopeful that that will persist, right? Because one of the things that's really clear about all this is the way we humans have been treating the earth was really unsustainable, right? we've taken rich soils and turned them into dirt that you have to pour nutrients on, like nitrogen and stuff, to make them even grow anymore. And if you stop that, it's really a sterile, broken environment. And we're not getting the food nutrition we need out of our food anymore. And we can see that in the sicknesses of people. There's now a really incredible overlay I saw of places where COVID killed the most people, including Northern Italy, bad run, were places that had the highest air pollution. So guess what? Breathing small particulates of dangerous things into your lungs was bad for a lung-based disease. Who knew, right?
Who knew?
So yeah, we're discovering that there are real consequences to the levels of pollution we were emitting, and people have woken up to that. I think that's a good thing. That's a really positive development here.
Awesome. Well, and I think we're going to figure that out together, right? I think we've seen a lot of things. We've talked a bit on the show about the economic side of that in terms of people's behaviors. We're certainly all more adept at using technology to communicate than we were even 3 months ago. And, we're guys that use technology to communicate. And so I think we are going to see the efficiencies that might come from that. And that could be a positive. But big picture on the economy, a lot of our panelists today are, you call them even economists, and we're going to spend a lot of time talking about that. But share with us, if you will, what you think some of maybe the risks, the dangers, the highlights, the things that could happen, what we need to be watching in the economy. We'll start there.
The challenge on this is keeping the list short, Robert. I think the biggest issue here is central bank intervention. And this all started long before COVID. But as many of your guests will talk later on, particularly folks like Peter Schiff, the central banks have blown a massive bubble economy that has basically created a lot of zombie companies out there, companies that wouldn't be around today if they couldn't service the debts that they've taken on, given all the liquidity and cheap money and rock bottom interest rates that the Fed has been artificially providing. So we've had this very unsustainable economy, unsustainable and unstable economy. And it, as Chris said earlier, there was going to be a pin that was going to pop this bubble. It was going to topple this house of cards over. Coronavirus just seems to be that pin. But what's interesting is we saw a violent immediate reaction in the markets, right? They were down 33% or so on average. And it basically recovered that magically, in a matter of a month and a half, right? While, as Chris said, somewhere between, 20% of economic activity we can say has gone away, looking at oil consumption. If you look at the predictions for Q2, at least in the US, they're predicting a Q2 GDP of like negative 43%, right? And yet the stock market is not reflecting that at all. So we've got a huge threat to our economy and our ability to produce, right? And we've got, in the US alone, we've got over 40 million people now out of work. And that's just the folks that we know of, right? But basically 1 in 4 American workers have lost their jobs so far. And I think it's highly debatable how quickly those jobs are going to come back. And I think it's highly debatable that they all will come back. I think many of them won't, both for economic weakness standpoints, but also for some of the technological efficiencies that you're talking about. We're going to be accelerating a lot of trends that would have taken a decade or two to happen. We're now going to do those within 18 months. And so companies are going to largely move to virtual workforces. And once the person's not in the office, well, does that person even need to be in this country? Right? If we can outsource it to another country for a fraction of the cost, yeah, there's a lot of Americans that might not be getting rehired, right? So there's a lot of real risks to prosperity here in the country, and we need to worry about those. But then as investors, if you're still keeping your money in these markets have never been more divorced from the reality on the ground. They are not only priced for perfection at this time, they're priced for hyper perfection. And so I think the big risk here is there's either going to be a really, really painful correction in the markets as they eventually adjust down to the reality on the ground, or they're not. Or we're at the point where the central banks have realized we've got to prop these markets up, or else they're going to correct in the way I just mentioned. And so you're going to get so much continued support with new liquidity coming in, and new money printing, that you're going to eventually create that runaway inflation that destroys the purchasing power of the currencies. It becomes a Zimbabwe world. I really do think that we're kind of at that binary juncture here, where we're either going to have a really, really punishing period of deflation, which is highly destructive to asset prices, and every investor's got to be worried about that, or what I think is an even worse scenario, which essentially is the currency that all your assets are denominated in goes to zero, right? And that's where I think at the end of the day, and I know we haven't gotten to solutions yet, but that's where I think you really got to be thinking about hard assets, things that have an intrinsic value, that no matter what the sticker price is, there is some intrinsic productive value to that asset.
Sadly, our 18th annual investor summit at sea is not going to be at sea. It's going to be our cyber investor summit this year. But when we get together and have that discussion, it's fascinating to go back and see the last 3 or 4 years. Pretty much, we didn't have a crystal ball. You guys didn't know where things were going, but the tangible results of what was the direction the faculty pointed to: hard assets, real tangible stuff, gold, silver, productive real estate, getting prepared, farmland, all those things are looking pretty good today. I think from the economy point of view, here's our big concern. We've seen the economic crisis and the upheaval and how that is translated over, the health crisis, and translated into the economic crisis. Now 1 out of 4 without jobs, businesses not able to open up, people literally getting more from unemployment than they would if they went back to work. That's a problem. Now, what about the financial markets, the dollar, the basic financial system? How far does that get bent or broken?
Take it, Chris.
How far does that get bent or broken?
Try to answer that in 60 seconds or less, Chris.
Yeah, I think I'll have to use fifth dimensional analogies. I don't know. It's really stunning what's happened, and so I think you alluded to one of the more important pieces, Robert, earlier, which is the degree to which behaviors have changed around this. So guess what? Companies have discovered that they don't have to have everybody come into the office. So the impact of commercial real estate is inestimable at this point in time. The whole WeWork model has just got blown up for reasons beyond people not wanting to self-collect into tight working spaces anyway, because maybe they've had their behavior change. My grandmother was so changed by the Great Depression, she never changed back, right? Her whole life, she was peeling labels off of soup cans and writing lists on them and saving string off of roasts and all that stuff, right? This is this generation's Great Depression in essence. And so it's shaped people's mindsets a lot. So listen, even if 80% of the people just go right back to how they were, they're going to Disneyland, they're buying F-150s on 8-year car loans and all that other stuff, 20% I think won't, or some number, right? You pick. And that number that won't go back, they're going to have a totally different relationship to debt, to what they value. I think, already we've seen the exodus from cities as people have made the decision, I don't want to just live in the city. Maybe I'd have a place in the country too. So we're seeing both demographic shifts away from geography. We're seeing behavior changes. And I think a lot of companies are going to come to the conclusion that not only can they run without on-site staff, maybe they can run better, right? As well, I have friends, good friends, who lost their jobs in this whole thing and decided for themselves, they're like, now that the dust is settled, I don't want to go back to that. I didn't really like that. I didn't like that world I was in. So it's almost like there's this freedom people have found. Not everybody. Some people experience this lockdown as the opposite. To them, it's prison, right? Prison with Netflix and ice cream and stuff. But for other people, they've found a new freedom in this. And so I think it's hard to overestimate just how profound those shifts are really going to be. And so this is where, again, to get back to what Adam was talking about with that adjustment reaction, that Gretzky thing, the puck is now in a whole new place, and we've got to try and start skating towards where it's going to be. And this is, I think, going to create exceptional opportunities as we go forward. It's also going to be for those who cling, like the old buggy manufacturers. This is, if you cling too long to what was, hoping it comes back and it doesn't, I think that's a really dangerous place to be. So our appeal is to have people become as flexible and as adaptive in their thinking as they can. And that's really the subtext to everything you mentioned, Robert, before, which is, when we're asking people to become resilient, we're actually asking them to begin to take responsibility for little slices of things that they had completely outsourced before. right? Food production. I was totally outsourced until you grow your first tomato. Then you've insourced just a tiny piece of it, right? And so in our view, we don't know how this world is going to turn out, but if you can be more resilient, that is across all these 8 forms of capital, which includes living capital and building your social capital up, of course, your financial capital, your material capital, which, we haven't quite got to yet, but I'm busy accumulating that because I don't know what's going to happen to future supply chains. So that would be, buying things a little bit defensively in case, they won't be there in the future. And things like that, but mostly that emotional capital piece, because that's going to be the biggest part that's going to determine somebody's success or failure, I think, in this story. Because when things are changing super quick, if you can't adapt to that in a reasonable time frame, then you're going to get left behind in this story. So with that said, this could easily turn into a gigantic, once in a forever, not even once in a generation financial crisis. And that's going to come because the institutions of the country, of the United States and the world, but our Federal Reserve is absolutely 100% unable to adjust to the idea that they can't just have credit grow faster than our income forever. They want our debts to grow faster than GDP forever. It's a broken model. It was never destined to work out in the long term. It's now fully broken. They don't know what else to do, so they're going to keep throwing credit into the markets as fast as they can. But in our world, what they're really doing is shoveling extra burnable substance into the boiler of the train that's already out of control. So with all that said, I don't see how we can avoid a major financial crisis. And it's rooted in the idea that the so-called managers, I call them managers, I can't even call them leaders anymore. The managers at the central banks and in Washington, D.C. are unable to conceive of anything but more of what just broke. And I don't see how that can work.
When your only tool is a hammer, every problem looks like a nail. Great analogies. Love that. Love the work you guys do. What does an investor do about that? Well, before we're done, we're going to ask all of our panelists 3 really important questions. We'll hear back from Chris and Adam then.
So guys, I have a question. You mentioned that the Great Depression changed people's behavior permanently. 2008 changed my behavior permanently, changed my personal investment philosophy, which drove a completely different approach to business and to my personal finances. I've been preparing for this moment for the last 10 to 12 years. And part of that preparation was understanding how to see further up the food chain to see a crisis coming. But my real obsession became the credit markets because that's where the problem emanated last time. And I didn't go past that. So meeting you has opened up things like the limitations of the environment and energy, and now the health crisis and it turning into an economic crisis. But just going back to the idea that looking at the shale oil business, because shale oil went from, high supply, high consumption to high supply, low consumption, which put prices negative. And when I saw that happen, my big concern was, how are these shale oil companies going to make payments on all this massive debt they've accumulated to develop the production when the production's going to go away? And then how is the financial system going to absorb that debt? And I've been watching that for a long time. Now we have this on a macro scale where even big 100-year-old companies like Hertz are going bankrupt. And when they came out, they said no business is designed for zero revenue. And so I guess my question is, with respect to looking at the financial markets and, realizing that so much debt is going to go bad. Do you have any indication or any thoughts about how that actually plays out besides the obvious, seizure of the credit markets and the cessation of the availability of credit, at least temporarily, like we had in 2008? Or is this going to be a complete game changer and the financial systems will never be the same again? Do you have any thoughts on that?
Yeah, unfortunately, I do. What we've seen is that the Federal Reserve has now decided that everything's too big to fail. Nothing's allowed to fail anymore. And so they're absolutely going to decide that it's too big to have the shale business fail. And as well, the government more on the federal side may decide that this is too important an industry to really allow a wipeout to happen. So we've already seen what the special purpose vehicle is. The Treasury Department is going to step in and buy corporate debt. I bet anything they're going to step in and buy shale debt. And the Federal Reserve is backstopping that as the banker of that leveraged transaction. So the Federal Reserve will, for sake of argument, will provide $1 billion. The Treasury will then lever that like a bank up to maybe $10 billion of purchasing, buy all the debt off of these shale companies, so at least there's a liquid market for it. That debt will go bad because it just has to at this point in time, leaving the taxpayers on the hook. So this is the oldest story in the book. First time I met Ed Griffin was on the Summit at Sea, the first one I was on. Such a pleasure, right? And he wrote Creature from Jekyll Island, and he has a whole fat section of that book. It's called Bailouts, right? And it just describes this exact process, which is socializing the losses, right? Privatizing the gains. So all the shale money that was made by all those executives paying themselves fat bonuses, they get to keep that. Now there's these massive bills to be paid, and so the taxpayer is going to be left with them again. It's going to be fairly complex. I used a funny term, special purpose vehicle, blah, 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 all that stuff. But here's the essence of it. The Treasury Department will buy broken debt for probably 100 pennies on the dollar. That will bail out whoever was on the other end of that transaction. That loss will probably be written down 90% or more, and that's all going to be eaten by taxpayers, current and future. So that's the name of the game. I'd be very surprised if it doesn't go that direction, because that's what my entire adult life has seen.
So that's exactly what I think. And I think that not just in the shale oil business, but almost in every business and all of the debt that's out there, which puts gobs of pressure on the dollar. So my big concern, of course, and I'm limited. I like I said, you guys started seeing things coming sooner. You may have thought things through the end game further. I'm kind of in this middle space trying to expand my horizon. But to me, it looks like the central banks around the world, but especially the Federal Reserve, because the United States has the world's reserve currency, it is going to have to print unheard of amounts of dollars in order to buy up all that debt. It's not like the Treasury is sitting there on any amount of money. And so to me, the $1 trillion question is, can the dollar survive this? I know it's the analogy is it's the cleanest shirt in the dirty laundry, and people use the dollar because they have to. But is there anything you see on the horizon, a scenario where maybe they wouldn't need to? There's an alternative to the dollar stops being the world's reserve currency, or maybe the dollar is strong enough to absorb all this printing. Do you guys have any thoughts on that?
To the spirit of your question, Russ, we wrote about this in the book Prosper, where we talk about the Kapoom theory. And I think what's gone on over the past couple of months have made us much more confident in that theory with an asterisk on it. Where you're exactly right. And sadly, you said it's the $1 trillion question. I think it's maybe the 20 or 30 or $40 trillion question. I think you're lowballing it there at just putting it at $1 trillion. And briefly, what the Kapoom theory is it lays out everything you just mentioned, Russ, right? I mean, pre-coronavirus, there were lots and lots of bad debt that was out there, of unserviceable debts in the long term that were out there. And the big question is, will those start to matter at some point? Coronavirus has come along, put a gut shot into the global economy, making that debt burden much harder to service now, particularly by companies where their revenue is going up in flames, like the shale industry. So the question is there going to be a period of time where those natural forces that desperately want to correct and clear out those bad debts, are they going to win out, at least for a period of time? I'm going to speak for Chris. He can correct me if he thinks I'm wrong. We don't see the central bankers of the world stepping aside and just letting that play itself out, like letting a forest fire just burning itself out. They're going to be under, I think, just unbearable pressure to step in and do something. And certainly they've already shown that they'll do that at the drop of a hat. They don't need to have a forest fire to get involved. They'll jump in when the match itself gets lit. So, I think the big question here is, the Kapoom theory is the deflationary part is sort of like a nuclear explosion, which starts with an implosion And then when fusion is achieved, boom, you get the massive explosion. That's the POOM. I think our confidence in the POOM is about 100% at this point, meaning that the central planners will ride to the rescue with literally whatever it takes. That's what Draghi used to say. Powell has his own way of saying that, and Lagarde, who's come in to replace Draghi, has basically said that she'll continue those policies. Kuroda over at the Bank of Japan has just been continuing to print as fast as he can. I don't think any of that's going to change. I think the big question at this point that Chris and I are wrestling with is the CAFEs even going to happen? Are we going to have that period where the deflationary forces win out, at least in the short term? We don't know. We could very well go straight to the POOM. I think the answer to that question is going to be answered relatively quickly, like sort of in the matter of months or maybe a year. And obviously, as an investor, it's very tough, because if you plan for the POOM, if you plan for runaway inflation, you're going to make a certain set of investments and decisions. But if deflation happens beforehand, you can get wiped out, right? You could be sitting in exactly the wrong portfolio mix. So it's so important here to be sort of watching this on a day-for-day basis, because sadly, there's no sort of safe place to ride this out. You've got to try to react to what's going on in real time. But I do think, to the spirit of your question, what happens to the dollar, what happens to fiat currencies in general, I think betting on a severely diminished, if not completely wiped away purchasing power is a pretty safe bet. It's sad to say. We feel extremely confident the end destination is a currency crisis. Exactly how we get there is still what's up for grabs at this point.
So I have one follow-up question, which that really leads up to, or sets the table for really well. And I started paying attention to gold a long time ago because it seemed to me as some type of a canary in the coal mine, if you will, with respect to the dollar and currencies, fiat currencies in general. And so I noticed that over the last couple of years, I think year before last, or maybe it was last year, central banks, who I would consider to be the ultimate insiders when it comes to fiat currencies, because they issue them, started piling up gold. They started collecting gold in a way they hadn't since the dollar collapsed when Nixon defaulted on the gold standard back in '71. And so I'm looking to Chris's earlier point about watching the actions more than the words. And you see the central bankers, the ultimate insiders, stacking up gold in advance of something. And now something is here, at least appears to be here. And so the big question at the macro level, global economy, does gold have a role to play? And then at the micro level, at the investor level, does gold have a role to play based on where we are right now?
Yes, gold has a role to play. It always has, it always will. And I know that for everybody listening to this who happens to be in Western country, particularly the United States, you get a lot of anti-gold marketing brought to you by Wall Street. And it's in the phrases and the verbs and the nouns that are sort of strung together in a hostile way in the Wall Street Journal, and the dismissive tones on CNBC anchors and all of that. But the truth of the matter is, I trust actions, not words, right? And so as you're saying, the actions of the central banks have been to accumulate gold. We don't even know how much gold China's been accumulating, but they've been on the big end of that. Russia's been accumulating, and everybody's been accumulating it. And again, actions, not words. Remember, this is now the second time Venezuela said, hey, we'd like to, dispense with some of our gold. In this case, they wanted to sell some more. And the Bank of England said, nah, we don't think so. We're going to safeguard your people for you and not sell it for. It's just like, what? It's just every time a country wants to try and do something with gold, somehow the BOE is there to sort of block it. It's just, and so the actions here are really important to look at. And as we saw this early hiccup this year, I believe gold is a before and after story. You've either bought it before these big crises come that we were talking about, or afterwards you regret not doing that because you can't find any. We already had a little supply hiccup this year. It's starting to resolve, but I think it come roaring back again. And guess what? Billionaires will always have access to this stuff. The big bullion banks will always be able to get their rich clients some, but for the people like us who are listening and people listening to this, it's a before and after story. You either have it or you don't. It has a role to play. It's one of several hard assets. I don't have all my eggs in that basket, but I got quite a few. But otherwise, yes, you want to be playing that game. Silver, slightly different story, but I like it even more from a dollar basis than gold at this point in time. And one of the things we're going to see is Russ, is the degree to which this whole economic shutdown has shut down base metal production like copper mining, zinc mining, things like that, which is actually the primary source of silver that comes into the system, because it comes as an associated byproduct metal that's a nice little add-on when you're selling your copper. So I think we're going to see actual supply shortfalls there as well in the not too distant future. But if you have a Rip Van Winkle approach, if you're like thinking a little longer, you're thinking, I plan to live 20 more years. I'd like to give something to my grandkids as yet unborn. Silver was my choice for that. If you said, Chris, pick one thing, Rip Van Winkle, you wake up in 20 years, you're glad you bought it. Silver is that item for me.
And Russ, if I could just build one more thing into what Chris said, and I agree with everything that he just said, I want to remind people of the size of the gold and silver markets, that they are the gold market is a relatively small market relative to the equity markets and certainly relative to the debt markets. You don't need a very big percentage of money to move out of those markets into gold to send the price of gold skyrocketing. Silver is a tiny market. And just as we saw with the coronavirus and the lockdown we went through, there were tons of products that were in ample supply in January that all of a sudden you couldn't get at any price in February, right, as people began panicking at the end of the month. And I want to just steal two terms from Mike Maloney, who runs goldsilver.com. He says, when the world really wakes up to this and money begins rushing into those two precious metals, their names are going to change from gold and silver to unaffordium and unobtainium.
That's awesome. Okay, guys. Well, thanks for those insights. Really appreciate it.
All right. Hey, good stuff, guys. Thanks for the work that you do and just the tenacity at which you go out and get information and share it in a way people that understand it. And it's just great to see you guys and to see the way that your audience is growing. If you're not yet following Chris and Adam at peakprosperity.com, you got to do that right away. They have a lot of free information. They also have a subscription side that is very affordable and really, really great stuff. So thank you, gentlemen, and we'll hear from you later.
Thanks. Goodbye.
Always a pleasure.
Well, there's episode 2 of the COVID-19 Crisis Investing webinar. So great to hear from our good friends, Chris and Adam.
Yeah, these guys are great. And one thing I think I really appreciate about Chris especially, but both of them, is they're data driven. And if the data changes, they're not afraid to change the direction or their opinion or their conclusions. And I think that in the environment we're in right now, they're modeling the way we all need to be thinking and behaving going forward, because this is a very dynamic environment. The data and the information is changing, and it's hard to know who to believe and what to believe. But Chris is definitely qualified to have an opinion with respect to the pathology part of it. And he's a data-driven guy, and Adam does a great job making sure that we're aware. So big thanks to those guys for sharing their big brains with us, and we'll look forward to talking with them again soon.
Speaking of big brains, episode 3 of the Crisis Webinar series is coming up next. You're going to want to hear this for sure, because one of the folks who knew what was happening back in 2006 and called the 2008 crash for exactly the reason it happened is our good friend Peter Schiff. He's an economist, he's an investment manager, he's outspoken, he's unbelievable. So be sure to stick around for episode 3. Peter Schiff up next.
Hey everyone, thanks for watching. Before you go, 3 things. Number 1, click the subscribe button, because when we have more subscribers, it makes it easier for us to attract better guests to share great content with you. Number 2 is click the notification bell to be sure that you're notified when we put up new content. This is obviously an ongoing situation. We're going to have continuous discussions about it. You're going to want to make sure that you're kept up to date. And then number 3 is make sure you share it. Tell a friend. Help us flatten the economic curve by getting more financial education out there to people who need it. Okay, so you know what to do. Click the subscribe button, click the notification bell, and we'll see you in the next video.
Systems break, and suddenly your family, friends, and neighbors are distracted with Wall Street stock indexes and Washington political pandering. Many are unaware and unprepared. Like COVID-19, ignorance of looming financial perils is also a disease, and the system is fragile. But you can help. Financial education is the vaccine. Share this free video series while there's still time. Alert people to these serious issues. If things turn quickly, the financial support system could be overwhelmed to the point of collapse. Help flatten the curve and reduce the impact on the financial system. Wake up more people to prepare. You have nothing to lose and a lot to gain. Share this video directly or invite people to visit crisisinvestingseries.com.